Powell said the labor market is strong but, quote, out of balance, and he made clear that the latest inflation report was not enough to secure confidence that inflation is going down. Powell calls high inflation a global phenomenon, but says the Federal Reserve is responsible to achieve price stability in the U.S. and, quote, we are committed to doing that job. Chief economist at Morning Consult, John Lear, is here to help break this down a little further. John, it sounds like Powell is preparing the public for another interest rate hike here, which could make everything from homes and car loans, credit card debt, all of that more expensive. Talk about the impact here and what sticks out to you from these remarks.
Yeah, thanks for having me, Dan. I think prior to this speech, the real debate was whether or not the Federal Reserve was going to raise interest rates by 50 basis points or 75 basis points. So there's widespread consensus that the Fed had more work to do. Over the last few weeks, financial markets increasingly have started to believe that the Federal Reserve would raise interest rates by 50 basis points as opposed to that more aggressive 75 increase. And it sounds to me like Powell is sort of explicitly coming out and trying to defend or leave open the possibility of being more aggressive, despite the fact that we've had some encouraging numbers recently, or I should say at least encouraging trends as it relates to inflation.
Now, John, he talked about not only current inflation, but the public's expectations of future inflations. Why is that so important?
It's absolutely critical because over time, as consumers, workers start to expect inflation to become higher in the future, it changes their purchasing patterns, it changes their job search activity, it changes their wage bargaining strategies. You start seeing more and more workers demanding higher wages, which in turn drives business costs and ultimately results in higher price inflation. I think you also start to see a sort of a hallmark of a period of hyperinflation, which we're by no means in a period of hyperinflation, but in a period of hyperinflation, you would start to see consumers front run spending. They'll buy things now with the belief that prices will go up dramatically in the future. And that in turn can have a self-fulfilling prophecy.
Right, because all that buying then creates more inflation. So what are some of the biggest factors you think contributing to inflation in the United States right now?
It's widespread, and I think that's in fact what's so concerning. Whereas inflation and the inflation story originally was concentrated in a few sectors, particularly these sort of pandemic-affected categories, it has spread to a broader range of goods and services. And in particular, it started to hit these core service categories. And I'm thinking really about housing and shelter in that sense. That's concerning from the perspective of policymakers because it means that it's going to be more difficult to get inflation under control. If it were really just used cars and gas prices, those would come up and then eventually come down. Something like services and core services in particular, those tend to be stickier and require a lot more work from policymakers to get those prices under control.
Got it. All right. John Lear, thank you. We appreciate the analysis.
My pleasure.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.